So I've been in the markets for many years now, and I'm often asked a question of, is it harder or easier, and what's changed in the markets and so on. And I actually did a blog post recently that sort of highlighted some of those changes, and that's what I'd like to talk about in this video. If you're interested in learning more about BetAngel, its tools and the opportunities they present, then why not visit betangel.com today and download a free trial. So on this blog post, I was talking about a number of different things. And I didn't give the blog post a great title, to be honest. It was, I think, finding value in malevolent markets, I think was the title of the blog post. Probably not the best description I've ever done. But basically it was describing a characteristic that is present in the market now that never used to be. And very often people say to me, is it easier or harder than it used to be? Well, the first thing to say is it would be a surprise if everything got easier as it went on. Although that said, practice and experience makes things easier, but I'm talking about the market in general. Because if you rewind to when I first started, there was pretty much nobody in the market. There was nothing there. And it was very easy to go in and out of the market and make a bit of profit without too much difficulty. But as the markets progressed in time, then the structure of them changed somewhat. But the thing to remember is that back when I started, there was nothing in the market. There was very little liquidity at all. So a part of the process of the expansion of the markets is that the number of strategies explode. And there are lots of different things that lots of people can do, and people find little niches here and there within the market. So necessarily over time, markets tend to get more complex. I think that's the way that life works in general. Things develop and mature from there. But is it easier or harder? I suppose it depends upon whatever viewpoint you're looking at. But certainly there are more opportunities around now than there ever used to be. But go back in the dim and distant past, there were less opportunities because the markets weren't as liquid. But the opportunities that were there were pretty simple to execute, and pretty much a fool could have executed them back then. But the funny thing is, at every stage in my entire career, what you tend to find is that people sort of are always saying that there's something that's difficult or impossible or whatever at some point in the market. And it's a sort of a bit of a myth, really, because people sort of say, it was easier 5 years ago. Well, 5 years ago people were saying, it was easier 5 years ago. And 5 years before that people were saying, so you always find this, and I think it's just human nature that people do things in a relative sense and compare themselves to something else or some other time, when in fact everything moves forward continuously. You can't think like that. They have that old adage of being able to, you must be able to walk, you must be able to run to even stay up with the pace of others. And I think that's just the same overall. If I rigidly stuck to using a typewriter now, I'd be at a disadvantage to people who had email. And so yeah, it's a natural progression. Things naturally progress and get slightly more complicated. But if you're unwilling to change, or you don't have that approach to anything in life, then obviously you'll be left behind as the market and as the world matures and goes forward. Anyway, what the blog post was talking about really was how a different type of activity has entered the market in recent years, but it's one that actually presents opportunity if you know what you're looking for. So if you go back a few years ago, markets tend to sort of move like this, and they would tend to sort of migrate in one direction or the other. But very often what you see nowadays is that the market does this, and it doesn't make any sense. And literally it makes no sense. Because, if you're looking at the price of a horse over here, and then the price a little bit later over here, what you tend to find generally is that the market more or less is pretty accurate. I think most people would agree that, and there is a consensus on that the price that's last quoted is reasonably accurate. If you look at the chance of the horse winning and the chance of its last price, there's a little gap up or down on either side, but overall it's generally reasonably efficient. Now that makes perfect sense anyway, because of the amount of information that's being discounted into the market. However, one thing that's happened that is definitely different from a few years ago is that the noise in the market is quite high. So the price starts here and finishes there, and it used to be a sort of a gentle migration from one point to the next, but now you can often see it doing this and flying around all over the place. And the funny thing is that makes absolutely no sense at all. So it's very easy to throw market efficiency in people's face because that is true. The market is pretty efficient. But the variability that you see, the amount of noise that you see in the market now is much, much higher than it used to be. And on the blog post, I was talking about, there's a lot of automated activity now, and the automated activity is trying to spot things and then anticipate or jump ahead of that. But the problem that you have is if you have lots of people doing the same thing, then something happens, a bit of automated activity sees that and tries to do something about it, and then something jumps in front of that, seeing the thing that the automated activity. So you have automation acting, and the whole thing just sort of spirals. And you see this very clearly in the market now, especially in the weaker betting markets. You get some wide deviations from where the price really should be. And that's actually brilliant, because from a trading perspective, that's essentially what you're trying to do as a trader. The price heads off in this direction and you sort of think, well, that's just bizarre. And eventually it will top out and then start to come back in the other direction, or it could go the other way. And you see this, it's endemic within the market. And the funny thing was, I was trying to demonstrate this to somebody, and I said, look, if I put an order here, you watch what happens. It will just bump up one tick in front of me. And I can see that activity in the market. So I went to do that, and incredibly, the price just spiraled out of control. At which point I pulled my order and the price came all the way back in again. And you can't tell me that is an efficient market, certainly in terms of pricing. If you lay something at 2, then it can't be back value at 2, or maybe it is. But then if the price moves to 3, then one of those is incorrect. It can't be back or lay value at, there's something going wrong at one of those 2 points in the market. And especially where it starts here, goes up to there and comes back down again, somebody's got that seriously wrong. And from a trading perspective, obviously you can trade that. But the bizarre thing is, and I never thought I would recommend backing or laying again, is that because the markets are so efficient in terms of their overall pricing, this creates back or lay opportunities as well. So that creates an opportunity if you just want to have an outright bet. And I would prefer you to trade, because trading is a much better way of making money and lower risk and less commission and all those things. But however, back and lay value is being created at those opportunities. Now, sort of even in the past, you would tend to get that on weak betting markets. Nobody really knows much about these horses, there's not much money, and the form lines are weak, blah, 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 and you would see quite a bit of variability in the market. But you're beginning to see it happen now, even on really good quality races. So when we look at Champions Day at Ascot, we had Al Mazur, which, is a well-known horse, great form lines, everybody knows how it's going to run, the weather conditions were fine, everything looked pretty normal. And it started at 2.5 and then gradually came in to just above 2, which is where I took an interest in the market. I could see that it was relatively weak in the market and that there wasn't significant amounts of people really going for this horse. So I put a lay order into the market and then started to watch the market as it developed. But something quite bizarre happened. For a group race where everybody knows everything about the horse, the price started to drift and then it sort of almost went exponential as we got closer and closer to the off. It almost went off at 3s, all the way from 2s. So are you realistically telling me at evens, it had about a 50% chance of winning. At 3, it had a 33% chance of winning. So are you really telling me that the chance of that horse winning changed that much in 10 minutes? I think not. So, you laying it at odds of 2 may have been value, but laying it at odds of 3, very unlikely that that's going to be value. But backing it at 3 definitely would be value. If the market's moved that much, it doesn't make any sense. So, what could have caused it to drift? Well, if the horse didn't look right, or the jockey was having a problem with it or something like that, that probably could have set off a drift. But because I was trading it, I'd eyeballed that horse and was watching it like a hawk on the way to post and on the way out and being paraded and so on, and there were no problems with it. It was the epitome of calm. So what on earth caused that drift? Well, I can't specifically say that I know what caused that drift. There was a bit of backing elsewhere in the market, but in a group race, there's no reason whatsoever for the price to have drifted that much. So I was almost tempted to back it because it had drifted so much, because I felt that there'd be long-term value there. And really I should have done, because it won, and it won easily, which more than justified the opinion of people who backed it in from 2.5 to 2. So yeah, whatever happened there to cause that drift was quite bizarre. But that just gives you an indication of something that happens now that never would have happened many years ago. And this is why certain styles are a little bit harder than they used to be, because that swinginess, the trendiness, the momentum within the market is just that little bit stronger than it ever used to be. It never used to do that, and you would never see that on a group race. That would just be impossible. And yet, you know, it occurs with amazing regularity now, and even on some of the bigger races. Now, for people who want to exploit that, that's brilliant, because you've got an opportunity there. But for people who are looking for that not to happen, then you've got a bit of a problem. So, you know, if you find yourself in the latter camp, then just change your trading style and change the way that you look at the market. Because for every situation that occurs within the market and the way that the market progresses, there's nearly always an opportunity that goes with it. So rather than being stuck in your ways and using a typewriter, you know, start looking forward and trying to understand how you can exploit these characteristics rather than moan about them. But, you know, certainly that's one characteristic that has changed over the years, that is present, but it also presents opportunities. And that's why I wanted to talk about it. Have a read of the blog post as well, because that will show you that, you know, all changes that occur don't necessarily occur in one direction. There are lots of positives to take from them as well. And that's why I thought I'd highlight that particular example. But yeah, have a look on the blog post. You'll see the graphs. We'll put the graphs in the video as well. And it's interesting to see how the market's evolved in that direction. But of course, you know, there are big opportunities there as well.